How's everyone doing? All right, all right. Took a week off last week. I was traveling with Mr. Henry in Charlotte, North Carolina. Morning,
It was a good weekend.
good morning. Very interesting end to the week in the markets. Some higher time frame consolidation.
Yeah, we'll see what we get going into next week. We're just kind of in the middle of the range on indices, so I need a little bit more clarity.
Give it 1 or 2 more minutes and then we will start going into it.
Yeah, Thursday was a pretty large range for resale. That just shows you when when it gets going, it gets going. That's a low resistance conditions there. You don't want to be on the wrong side of that, without a stop loss, of course. That's spooling right there. That's where it just prices lower, 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 or higher, higher, higher.
All right. Shall we go ahead and jump into it?
Yeah, sounds good.
All right. So no news on Monday, no news on Tuesday. Starting the week off with 8:30 a.m. on Wednesday, we have CPI being released, a yearly and monthly. So kind of the big area to kind of watch and be sensitive to this week. But after 8:30 CPI on Wednesday at 1 p.m., you have a 10-year bond auction, and then you have meeting minutes at 2 as well. So Wednesday should be a very eventful week. Or day of week. Thursday, 8:30 a.m. You have core PPI month on month, regular PPI month on month, unemployment claims, and then at 1 o'clock you have a 30-year bond auction. And then Friday at 10 a.m. you have consumer sentiment, and then on top of that, inflation expectations. So main things to really watch out for, I would say, are just Wednesday, knowing that there is no news on Monday, there is no news on Tuesday, and then you're going right into Wednesday with CPI. So I will definitely, for myself and my own trading, not be looking to participate until after that CPI release on Wednesday. I will let Monday trade, I will let Tuesday trade, and then I will see what potentially Wednesday has in store after the 8:30 a.m. release of CPI. I'm also going to note that you have meeting minutes at 2 p.m. as well. So the PM session could also offer something following all the whiplash that CPI can create potentially. Although CPI is usually instant redelivery, it's not really seek and destroy. It's just a large range instantly. So keep a note on how that could potentially look on like a 4 hour or even a daily and a weekly. And yeah, that's really about it. I mean, Thursday isn't too bad. PPI is not too crazy. And this bond auction should offer some volatility in the PM session there. And then closing the session or closing the week up with Friday's consumer sentiment at 10 a.m. Other than that, any questions, comments, concerns on news? Good there? All right. Well, then I will go ahead and switch to dollar. Okay, so dollar, and I'll even go out to a monthly really quick. You can see that we are in this monthly SIBI right here. But the idea is to see what have we done once we have gone into this monthly SIBI, what have we done following it? And now that we are back in it, how have we responded again? When you go into a weekly, a couple things to note here on a weekly is really this SIBI right here, which don't like marking too much up. but you've got this SIBI right here on a weekly, and then this daily BISI. The reason why I am a little bit more bullish in this scenario is because when we originally made this low into the original high in the higher time frame SIBIs, right? When we create that initial dealing range, price traded back into a discount and then created displacement again to the upside, creating this weekly BISI. Notice how there was no displacement really created in this original run lower following the higher time frame delivery of the SIBI. We did have a tiny little SIBI right here, but you can see it was very quickly invalidated. So to me, the idea is if price is going to deliver higher, it's going to fall back into, which was the weekly BISI that we had talked about on the midweek review. And we notice how we closed all the way back into this SIBI, right? So we're not, even though we've delivered back into this SIBI on a higher time frame basis, we're now unwilling to kind of close below it. And it's kind of a tug of war between these two right now. But for the most part, I like the idea of price potentially respecting this and going to the buy side. Now, obviously, if we close back below the consequent encroachment or even necessarily the entire end of it, you can have price aim to deliver towards the sell side down here, right? The two targets that I'm only looking for, if I'm bullish, I'm looking for the buy side to be delivered here. If I'm bearish, I'm looking for buy or sell side to be delivered down here. But I'm a little bit more bullish in this sense, and I'm going to target that 105, 100 area. When you go into a daily, a couple things to note. Yes, dealing range. So on the daily, though, I will note, being in that higher time frame SIBI, monthly, weekly, all that good stuff, right? You have this buy-side liquidity pool that was ran, and with that, we do have displacement down here. So one thing I would be willing to watch for is taking this daily SIBI and really looking to see, notice how we came all the way up, we filled this on Friday, came all the way back down. I believe we could probably dig lower into here. And then if we're going to go higher, I really want to see closure back above this SIBI. So I would really want price to get back above the SIBI and then use that as support and then start going higher into that, right? Because we do have higher time frame inefficiencies in here, monthly, weekly, and daily. We did take liquidity and we did displace off of that. So I would keep that in the back of your mind. And I would also watch for daily closure at the weekly BISI, right? If we close back below the weekly BISI, if the next day doesn't shoot all the way back up and we kind of just hang around, we could start to see price go lower and use that as kind of resistance. So to me, on the dollar, because we displaced off the weekly after going into discount higher, I'm going to aim for the buy side, but it is still tricky, right? It is still tricky with regards to how we could potentially play. All I'm doing this week is, one, I'm letting CPI tell me which one it wants to take. So I don't need to know which one it wants to do, but I'll let CPI do its thing and displace whichever it wants to do, higher or lower, and then readjust from there. But the main thing is identifying daily candle closure on this weekly BISI and this daily SIBI. That's the forefront of my analysis this week on dollar. How do we close in and around this SIBI, and how do we close in and around this BISI on the weekly? That can guide me to tell me whether or not we're going to head back up here above 105 or drop down lower into the low ends of 102s. But that's about it for me. I'll leave that for you, Henry.
Okay, good. And I think it's important to remember too, it's okay to not have a complete grasp or picture of where price is drawing to at times, and it's fine to wait for more information and get some more clarity on that. So there are going to be times like when we're inside of higher time frame consolidations, like as we get into, well, what we're seeing on dollar right now, and also what we're seeing on indices. As I get into indices, I'll go ahead and pull it up here. And when you're inside that higher time frame consolidation like this, it can become more challenging to determine a clear draw on liquidity until you get much closer to that draw, because we're just operating within a range. Okay, and just like I talked about, I believe on Friday in the commentary, when you're working inside a consolidative range like this, you want to treat things a little bit differently. So you're not looking for as extensive price targets. You're looking to play external back to internal instead of internal to external. So you can see, like on all of these prior monthly candles, we could find opportunities within here where price retraces into the range and then goes to external liquidity, and we can be long buying here and then selling it back above the highs. Again, here, selling it above the highs, here, selling it above the highs, right? When we're in a consolidated range like this, then we're looking to do things a little bit differently. So we work inside of a lower time frame, like you drop down to your daily chart here, and you're playing external back to internal instead. So while you could potentially find a sell up here, like we saw on Thursday inside that daily SIBI up there, to drop down into the sell side, a lot of times the best scenario when you're working inside of a consolidation is to wait for external liquidity to be purged, like we saw here on Thursday, and then find an opportunity to go back to internal. So like here on your lower time frames here, we can see that liquidity was purged under the lows right there. So then we're just waiting for NFP to come out. We drop lower, we shift market structure above this high right there, and then there's a 15-minute BISI. You can be a buyer right there. You can be a buyer again in here, inside that inefficiency, and work back up into a premium of the dealing range. Okay, so when you're in a consolidation, I like to focus my attention on playing external liquidity back to internal. But we'll drop into just a little note there, and we'll drop into our analysis here then. Let me just check the chat real quick. I've got my streamer mode on, so I can't see everyone's name. Did you touch on that comment already, Carson? I think it's Stort, but I can't see the names. Isn't the dollar just an amplifier or headwinds for where the market is going, or is the dollar not the driver of price? It either helps or holds back the main move. You're muted on Discord as well.
Can you hear me? I'm sorry,
Yeah.
I think I was muted. In my opinion, it's not that it's the driver of price. It's just a collective. There's a collection of assets that, when they trade in certain directions, create easier scenarios and environments. So it's something that allows the environment of trading to either be very easy or very fickle. So it's not that it's like, the driver of price. It's just where it goes dependent on where indices go. It's not that it's more important than NQ or it's less important than NQ. They're equally of importance. But what is important is not which one's heavier weighted or whatever. It's the direction that they're going. So that's where it creates a little bit of a, are we in an easier scenario, which would be low resistance, or are we in a harder area, which would be high resistance? If they're both trading in the same area, high resistance, same direction, excuse me. If we are bullish and the dollar goes down, then the cost of other currencies is less, adding to the buying. And you don't really even have to think about it too much like that. You can bring it down levels too. It doesn't need, you don't even have to. I don't even think about that stuff. Is dollar going up or down? Is NQ going up or down? From there, I can figure it out. And I'm not really trying to overthink all that stuff. I don't need to think into the too much. It's the simplicity will save you. Just keep it simple. Is dollar trying to go higher or lower? And with that, what are indices doing to that? If that's the case, I need to be able to identify areas in the market where indices are clearly going higher, dollars clearly going lower. That's going to be my best trading. Vice versa. Dollars clearly going to go higher, indices are clearly going to go lower. The draw on liquidity is right in your face. Super easy to tell. Those are going to be your best case scenario trading. Don't have to get into the idea of fundamentals or anything like that. It's super easy, but it has not happened yet this year, right? I was talking about that on my on one of my kind of lounge sessions last this week or later this past week. We have not had that yet this year. Dollar's been going higher, indices have been going higher. That's why you have the scenarios that you have right now. If you go back and look at last year, NQ went higher, dollar went lower. It was a lot easier. It's not going to stay like this forever, but it will start to turn. But the best way I can teach someone to kind of really truly understand it, look to see whether or not they are going with each other or against each other, and you want them to go against each other. If they're going against each other and it's super easy and clear, easy trading. Not easy trading, but easier trading. If they're going hand in hand with each other and they're both going one direction, it's going to be hard to trade. It's not a hard sense of like it's hard for someone because they're newer. No. It's hard just in the idea of trading, managing trades. Stop losses have to be wider. You have to be more patient. It stays around areas longer. It doesn't go for higher ranges. And if it does go for higher ranges, it comes back quickly. Like there's so many different things. The hard aspect of it isn't like the information of where it's going. It's trying to actually physically be in a trade and actually trade it with money and have it not allow you to get messed up in the head and spiral in certain cases. But that would be my answer. The more you get into like what the cost of other currencies are doing and all that, you're just going to confuse yourself. It's something that you can do research on and you can look at too. And if it clicks for you, it clicks for me or for you. But for me, the more simple I kept it, the easier it was for me to understand and identify. You can add to that, Henry, if you want.
Yeah, I think keeping it simple is good. Really, we're just looking for that inverse relationship between the two. And you can still trade when there's not an inverse relationship, when the two are moving in what we refer to as mixed market, where the indices and the dollar are both moving in the same direction. So either both moving higher or both moving lower. You just need to adjust your expectations. And we've talked about that a little bit in terms of trade management, how you want to aim for that lower hanging fruit. You're not expecting as wide of price runs. And in your management, you want to be taking your partials a little bit more quickly and trailing that stop in. Whereas when you're in clear inverse situations where the dollar is moving lower and indices are moving higher, or the vice versa, you can hold for those larger ranges. You want to manage your stop a little bit more loosely, allowing for retracements and expecting continuation in the market. So you just have to see the current situations and understand the scenario based off of that and how it may impact your trade management. But yeah, definitely a bit more challenging to trade and manage trades inside those mixed market conditions. But let's go ahead and get into indices here. So on a monthly chart, we're looking at ES. We're consolidating here overall, just noting that we do have inefficiency below and a small area of inefficiency still between the current low of April and the high of February right here. So small area right there. If we are to come back a little bit lower, we could trade down into February's high to do that immediate rebalance. Okay. Weekly chart, as we drop in, you can see that last week we traded back down just into our bullish order block here. I'm referring to this candle really with the lowest down close body, but I'm looking at the two of them together. But since the wicks are so long here, I'm looking at the bodies of the candles. But if you take your fib and just put it on the bodies right there, you can see how we nicely respect the mean threshold. and came back off of that to close in the weekly BIST right here. So we have closed in it, so we're still respecting it, just technically speaking, right? We did close in the lower end of it, so I'm being cautious of that in terms of that we could trade lower back down into the wick of this candle in the following week, but I am noting that we're still respecting this as a discount array. And so as we drop down into the daily chart, we want to see headed into next week, do we create new displacement to the upside? If so, then we can continue reaching for the buy side up here and following along with the higher time frame bias that we've seen on the monthly and weekly charts, where we continue to expand higher. If we do start to create new displacement to the downside, then of course we have those areas of inefficiency on the monthly below that we can trade into. So really what I like to do when I start getting into the week is just focus on my daily chart, and then of course on the 4-hour chart as well, and seeing where new displacement is taking place. So right here on the 4-hour chart, you can see that last week we reached up into that daily SIBI, which is marked out here. You can see the candle bodies respecting the midpoint really nicely, and then drop down into the sell side. And then here, reaching back up into a premium of the range. So right now we just want to recognize that we're trading inside a premium of the range. So if you're going to be a buyer, ideally you want to do that at a discount. And so I'd like to see first if we can see any effort to return down into a discount of this range to find a potential buying opportunity. And I would be less interested in being a buyer if we do see new displacement to the downside. So I'm really watching on the daily and 4-hour charts and seeing where the next displacement takes place. So right now we're seeing prices displacing back up higher into a premium. So we want to see, does price return back into a discount and respect these beta rays to then continue displacing higher, or are we trading through them and creating new displacement lower? Remember, we're operating within a higher time frame consolidation, so we're looking for smaller targets. We're looking for low-hanging fruit. And so when we get into the week initially, I would just look for opportunities like this. Let's say price trades down into this inefficiency right here. Do we get new displacement to the upside? Here. If we drop, or get that tool there. Do we drop down into here and then create new displacement to the upside? If so, I just look for the context point that was created before that. So I'd look for price to trade up to this high here. If we do trade below that inefficiency and create new displacement to the downside, then whatever was created within there could then, and even this inversion here potentially, could be utilized to trade back down into sell side liquidity and the area of the monthly inefficiency that we had below here. Okay. Like Carson went over in the economic calendar, Monday and Tuesday don't have any news in terms of high, medium, or even low impact news. So we want to be watching those first couple days just in terms of consolidation, and then see what CPI does on Wednesday, and then formulate going into the later end of the week, are we likely to trade back down toward these lows or just work deeper up into a premium? Okay. So not a whole lot of clarity at the moment just in terms of where we are trading, but you do want to recognize that we're still respecting discount arrays on the weekly time frame here. And so from a higher time frame perspective, I still have to operate with a bullish perspective, but I want to see intraday, are we continuing with that perspective? Are we creating new displacement higher, or are we starting to see a potential turn down into those higher time frame inefficiencies? There's not a whole lot of clarity just yet, but from a weekly perspective, we are still bullish. Okay. The last thing I'd note here just on the daily chart is that we're trading now up into our bearish breaker and the bearish order block right here. So if we are able to see closure on a daily candle through the mean threshold of this down close, then that's when I would really expect for price to start working back up toward this high. Okay. Any questions here on ES before I go to NASDAQ? Stuart, seems like there's been a market structure shift to sell. Yeah, you had a bit of a 2022 model here, right? You ran out the highs, you shifted under this low there, and then returned up into a premium inefficiency right here before we had the sell off on Thursday down into those lows. But now you've returned back into a discount of the range and into that higher time frame order block right here on the weekly. So you have to be aware of the fact that this may not continue. So while there is opportunity within that to be a short seller, it doesn't mean that we're going to continue drawing lower. And we need to see that continued displacement to the downside if we are going to work down there. Otherwise, we have to continue with that higher time frame bias. Any questions here on ES? Breaking 53.10 is important. 53.10. I'm not sure exactly what you're saying, Stuart, but 53.10, I guess that looks like about your buy side. I have 53.08.5 up here. I would want to be using this not as a time to buy, buying at that high, but I would want to see how we develop price action to target that high up there. Oh, if you're being a short, yeah, if you were looking to short this, then you wouldn't want to see price back above that high. If we're trading back above that high, the likelihood is we're going to reach for here. Because if you're looking within this range, if you're looking at all of the premium arrays inside this range on a daily chart, you just see your breaker, your bearish order block here, and then the city that we've already traded through the high end and displaced away from. So this is a balanced price range now, this city right here. So if we are to trade up into that, if it's not respecting the midpoint, the consequent encroachment, and driving lower off of it, then we're going to work up into the buy side. And if we're trading through the buy side here, you have no premium arrays above that other than the swing high. So if we're going to trade above this high, the likelihood is we'll go make new highs. Okay, I'm going to go into NASDAQ. Same deal on NASDAQ. We don't have the same inefficiency that we have on ES, but we do have a lower BISI down here, buy side imbalance, sell side inefficiency. I don't immediately expect for price to trade down into that area until we get some form of higher time frame displacement on the daily or weekly charts. So still just expecting that this operates within a consolidated range and then ideally continues to reach higher above the buy side if we don't get that higher time frame displacement lower. So right now on a weekly, you can see we're still just trading inside the bullish order block right here, which we respected there, and again right there. And we're trading within a discount of the range. Okay, so we drop back down into a discount into the mean threshold, respected it nicely. So if we're trading down into a discount and then displacing away from it, we want to see price work back up into a premium of the range and into premium arrays. So we're still bullish on this, still looking for buy side until we get higher time frame displacement lower. I'm just going to take that off one moment. You can see on the daily chart, we also are still working inside this reclaimed BISI right here, which we utilize there, and again right here. You can see a really nice respect for the consequent encroachment, the midpoint right there. Okay. And then trading off of that, back up into this BISI, which we traded inside here, drop back down, and then the high on Friday was made right at the consequent encroachment of it. So I want to see, are we respecting that and the bearish order block here as premium arrays, and going to work back lower off of that down into the sell side, because we did create pretty much relative equal lows here. We did actually just purge that low just by about a handle or two, but left relatively equal lows there. It's a pretty shallow purge, and so we could come back down into that. But since we're operating with a higher time frame bullish perspective from the monthly and weekly charts, I do just want to see if we can trade through premium arrays. So just like I talked about on ES, I'll want to watch this up close candle here, see if we can get closure through the mean threshold of it, and if so, start gravitating up toward the buy side here. Okay, and since we did trade into premium arrays, just like I mentioned on ES, you just want to drop into your 4-hour chart from there and see, do we continue to respect discount arrays that have been created through this move up? So you have that BISI there and this one here. Do we trade down into a discount, respect those, and continue to displace higher? Or are we trading through them and creating new displacement to the downside? You're just following that displacement and aligning yourself with the order flow. So ideally, we want to align ourselves with higher time frame bullish order flow and start reaching up toward these highs up here, like we're seeing on the weekly chart, still respecting discount arrays. But if we do see that displacement lower, that's when you can start looking back toward these lows. If you're not seeing displacement lower on that 4-hour chart and trading through these inefficiencies here, then I would not be looking for shorts. Any questions here on NASDAQ? All good. Mauricio, go ahead. I think I invited you on.
Good morning, Henry.
Good morning.
When you say the displacement on those two pieces that we have on NASDAQ, the displacement will have to be on a 4-hour. Let's say that we have two pieces, right? Let's say that we get into the first piece.
Mm-hmm.
What displacement are you referring? Like an hour displacement toward the high of the 4-hour of the last 4-hour candle?
Yeah,
so if it touches there and then we
I typically
yeah,
go down just one time frame. So I'd look
One
for
time.
price to trade into here and then
Mhm.
create new displacement higher after trading into there, meaning it's creating a new BISI like this on the 1-hour time frame.
Okay, but just to make sure. So let's say that we touch either the beginning of the fair value gap or a little bit deeper, and then we displace. But what do you consider displacement? Taking the high of that 4-hour candle that we're seeing right now, or just
creating
going
a
up? No,
BISI.
the 4-hour, the high of the 4-hour, the first one that you have there.
Oh, I would look
So once we take that high,
I'd look for this high. So I'd look for price to trade down into here,
Mhm.
create new displacement, a new BISI like this on
no
the
BC on the
1-hour
1 hour.
chart. Yes,
Okay,
correct.
okay.
And then to
Got it.
trade up toward this high.
And the stop will be
Whatever low
Usually
gets
you put-
created.
whatever low was created. Okay, perfect. All right. Thank you.
Okay. Any other questions here on ES, NASDAQ? All good. Okay.
Main thing to focus too on, I'll add something real quick, Henry. Can you hear me?
Yeah.
Main thing to focus on is just take a second and look at the chart in front of you right now on Henry's screen. Higher time frame consolidation. This is good because you're learning how to deal with this stuff. There is nothing here that says that we have to trade outside of this range anytime soon. Now, I will say, if there is one news event that could potentially utilize the volatility to trade outside of that range, or at least because on Thursday of last week, when we sold off, it was glaring that price was going to continue lower after that daily candle on Thursday. And it's funny how sometimes one, you have to just look at the market and laugh because 99% of people that you've ever looked at a chart or not, 99% of people in this world, if they were to look at the chart on Thursday, after Thursday's daily candle, anybody with just common sense would just say, hey, that chart looks like it's going to go lower. And you have to really think of the market where if the market looks blatantly like it's going to go in one direction, you're going to get what Friday had. Didn't continue, no follow through, right? And so CPI could very well get us outside of this range. But also, Monday and Tuesday could go to any of the higher low of the range, and CPI could bring us right back in the middle of it. And so you have to just be patient. And like Henry was saying when he first started, you're playing external to internal. not internal to external in these scenarios. This is key. This is very, very key. Because if you're the trader that's trying to get in, like Henry said, on that 1 hour BISI that he's just highlighted right there talking with Mauricio about, if you're trying to buy in that 1 hour BISI and you're trying to hold to 18,700 at the all-time highs, you are not in an area where it favors. It doesn't matter if we're higher time frame bullish. It doesn't matter if dollar is going to go lower. You're in a range, and that thing can stay in a range for however long it needs to. The market will always be way more patient than you are. And it knows that the more it stays in a range, the more it can chop you out. And odds are, when you get in ranges like this, both sides get taken. So odds are, potentially, the side that gets taken first, odds are we come right back into the range. And then you look to see if we follow through the range. So just be patient. I know we were talking about it earlier in the week when I was on my lounge call. And that's why until we see follow through on dollar's playing in between a higher time frame BISI and a higher time frame SIBI. 3 higher time frame nested SIBIs and then 1 higher time frame BISI after delivering into a discount. It's right in the middle. We have to just wait for more data. Can you play smaller moves within it? Of course. But it's the expectation that you want out of the charts. That's the only thing I wanted to add. Note that higher time frame consolidation, you trade it differently than you trade anything else. You have to have a lot less expectation out of the market, and you can't force anything. You have to be very, very fickle within it. But I just wanted to add that. We can go into training exercises now. I have it set up.
Okay, great.
All right. Training exercises. And we are going to be doing something new after this week too. So please, after the training exercises, make sure you stay around. We're going to kind of talk about it, get your guys' feedback. All right. Tell me if you can see my screen.
Let me make it large. But, yeah, I can.
Okay, so this is an easier way for us to do this because with regards to the Discord audio, when I go back into Discord, it loops through Henry's audio on the recording. So this is just an easier way. So starting off with Kate's, basically her bias was bullish. The emotions before the trade, I wasn't feeling that great, so I decided to not take too much risk and use micros. Love that. Understanding risk profiling, that doesn't necessarily always lead to technicals. That can be psychological too, right? It could be a beautiful trade setup, but if you're not there mentally or physically, still dial back some. During neutral, price hit my first TP quickly, so it was just about managing the runner. Price bounced off the newly formed 5-minute BISI at first, but it came back and closed below it. I exited the second contract at break even after that. After that, I was neutral. I should have recognized that we weren't able to make any headway above the 4-hour order block and got out my runner earlier, but I'm happy to see that Henry and Erase both took trades during this price run. So this was her first idea initially, right? So she's got a 15-minute order block in here, right? The series of down close candles. She's got equal highs up here. She's understanding that price is going, she's got a 4-hour order block, which is this blue line that's not seen in here. She's looking to target the highs in here. She knows that price just took sell side liquidity in here as well. And we're trading inside a 1-hour BISI. She says, we're range bound price action, sell side liquidity taken and bouncing off a 15-minute order block. Look for opposing liquidity above. So here are her entries in here, right? Stop just below this order block in here. Great entry. Great exit. Obviously, she's wanting to hold for higher targets, but that's okay. She at least was able to move her stop to break even. So trade duration 24 minutes, 2 micros, 1.3, and 1.316. New York AM Thursday, 1 partial was taken. Stop was below the order block. Draw on liquidity was the 8:30 buy side liquidity in here, the 8:30 highs. I'll also note one thing too. When you see it very clear highs or lows created at 8:30 or 9:30, that's a signal to me. Like if the exact high was created at 8:29, 8:30, or 8:31, odds are, if everything else lines up, that's a very good area of liquidity for you to utilize. But I think it's a great trade. I think, it's the idea of what I was just talking about. Trying to hold runners in this range, it's going to be very difficult. It's going to be very, very difficult. Until we get outside of this range, the idea of holding runners are going to be slim to none because you're going to get this price action. But I think it's a great trade. I think, you did everything you can. You did what you were supposed to do because you're trying to hold a runner, so there's not much more you can do than go to break even. I would say the only other thing, if you were trying to hold it tight, even though you're trying to hold a runner, but you're still wanting to kind of keep it tight, you could have moved it quickly to this low. And you could have also understood that you never really got candle closure back above this 4-hour order block. But it turned pretty quickly, so there's really not much you can do in the moment. So I think you're fine. I think this was a good trade. You want to add anything, Henry?
No, I think this was managed really well overall. The only other thing, just in terms of price signatures to note, is that each of those candles that's running up and making a new high, you're not seeing any candle bodies above. It's just wicks through it. So just something to note in terms of how you can start to trail up a little bit quicker and lock in a little bit more of the trade on there. But overall, I think this was managed really well, and the setup is excellent.
Yeah, the entry is good. The entry is spot on. Okay, next one. Let me pull up.
Good going, Kate.
1 second. Okay, Ron John. This is Kate's business, by the way, so you can see her trades right here. Right, this is kind of her break even. This was her first partial right there. Okay, Ron John. The duration of the trade was 2 hours and 3 minutes. The size of the trade was 1 NQ lot. Contract. Risk to reward was 1.1, so basically a 1-to-1. Time of day was the New York lunch hour. 12:22 entry, 2:25 exit. PDO raised used was the daily bullish fair value gap, consequent encroachment, a mitigation block on the 5-minute fair value gap, and an order block on lower time frames. The draw on liquidity was the internal buy side liquidity. Stop placement was below the fair value gap leg. No partials were taken. No break evens were taken. Before, I didn't trade on Monday or Tuesday due to work and travel. On Wednesday, I was looking to put a trade on, and I had marked out all the higher time frame PDO rates prior to the AM session start. At market open, we dumped. Once sell side was taken, I was patiently looking for a market structure shift on a 5-minute to join the longs. Very calm and patient with my entry. Emotions during, I did take some heat and drawdown on the position after a lot of waiting. In fact, I started doubting my execution as it was lunch hours, and from past experience, lunch trades mostly ends in loss for me. But given the fact that there was liquidity sweep at the lows after sell-side liquidity, I stayed with the trading plan and respected my stop loss. Emotions after, happy with my executions, though it was a very long hold for a 1-to-1. So you can see price dives down. We're in the daily, consequent encroachment. On the BISI, we take the sell-side liquidity. And I know it's a little fickle in here. There we go. So from there, you're using this mitigation block right here. You do have a little bit of displacement. You're getting in early right here. Price goes to this first TP1, but you're only trading with one contract, so you can't take a partial. Comes back, gets very close to your stop loss. Comes right back down into this fair value gap. So notice the candle body closure within this fair value gap, and then you trade into the TP2. So I mean, I think you managed it well, and that's why it goes back to the whole topic of conversation on my side this week is how hard it is to trade right now. Because what did price do then? Right, comes all the way back down here, and then goes all the way back up here. Right, that's seek and destroy tendency. It's very hard to manage trades or hold runners in this area. So you have to keep that in the back of your mind, right? I would also say, if you're looking to play, if you have TP1 marked out, switch to micros and actually take it. It would have allowed you to have less stress trading this. You would have taken it here, you would have taken it here, and then from there, yeah, you probably would have, your trade's done for. But what if if you were trading with micros and a little less risk, what if your stop was down here or down here? And you were able to take partial here, take a partial here, and then take a partial somewhere up here. Right? My odds are you might have been able to risk less and get more out of the trade using micros rather than just one mini. So keep that in mind. I think it's a great trade, but I also think that, especially in these scenarios in the market right now with the way dollars trading and where NQ is at, trade micros. You're going to get a lot more out of it. It's when you're trading in harder conditions, trade micros. I think that's the only thing that I can really, piece of advice I can give you from this is just trade micros. You could have risked less in this trade, or even just as much as you risked, and had a little bit larger of a stop, and you might have been able to hold longer. Now this is hard price action, but also a couple things to note. After an expansion move like this, what can we expect out of the market? Consolidation. So you have to expect that. Now, obviously, you see the consolidation in here, but you still have a fractally a little bit of a higher time frame consolidation throughout all of this. I would also say time. Quite frankly, you were a little early on this trade. And you even said it. From your past experience, lunch trades mostly end in loss. Even waiting for that 1 o'clock open and letting that lunch hour roll over, right? You might have been able to find a trade on a 1 minute or something in here and catch this, right? Because these are the moves that we want to be participants in. Yes, the trade played out and it worked and you got paid and that's great, but at the end of the day, you want to always be looking as to where you can capitalize. And we don't want to be trading in these conditions. We want to look to try to see how we can trade in these conditions. And how do we do that? We identify time and and price cycles. It's time and price cycles. So after consolidate or after expansion, right? You can look for consolidation and potential reversals, right? And that's where you reverse and go higher, and or retracements, right? So just keep that in the back of your mind. I think it was a great trade, though. I think you played it fine. I think you had the good enough patience, right? Price got close. You stuck to your guns. That hard stop played in your favor. Anything you want to add to this, Henry?
No, I think it's a good trade. I think, I like that you focused on external to internal, like we've been talking about inside of consolidation. And then you aligned, though you said lunch is not normally a good trading time for you, you did align what price should do within that lunch hour with your trade idea. So I think this is really well formulated and took it from 12 to 1 back up into the range, just like we're expecting to see during that lunch hour, or retracement on stops there. So I think you managed it well. Nice job, Ranjan. Yeah, I as well would like to see you switch to micros, though, and just see if you can focus on taking some of those partials. Because it seems like through a couple of your previous examples, you've marked out a couple opportunities for take profits, and you're usually reaching for the further one. but there's not a way to really know with such certainty that we're just going to reach right up into the second take profit there. What if we just hit take profit 1 and then your trade comes all the way back and trades back down into the sell side? Then there was no opportunity to book anything. So you want to get into the practice of taking those base hits, at least taking a piece of the position off there, and then giving yourself the opportunity to hold for more. It'll reduce your emotions and it'll give you better, larger range opportunities as well. So try that out. Try that out going forward if you can. Switch down to just a few micros.
This was the business for him. Alrighty, Aiden. Okay, macro here. Concepts use macro periods, volume imbalance, breaker blocks, 2022 model, E-mini, NASDAQ, time frame 1 minute entry, 5 minute framework, 38 minutes, 5 contracts, 1-to-1. Time of day was 2:52 a.m. entered, 3:30 a.m. exited. Liquidity taken was the Asia high, draw liquidity was the Asia low. Stop placement was 7.25 handles above the 5 minute volume imbalance. 2 partials. Time of break even was 3:06 a.m. and you were bearish. Price has swept Asia buy side and violated a 5 minute BISI, which framed a low risk sell on the market maker model sell curve. However, I was framing this trade on the 5 minute. I would have liked to see a very obvious market structure shift with intermediate term low inside a 5 minute BISI get violated with another 5 minute SIBI. I waited for a 250 to 310 macro to give me my desired entry at the 5 minute SIBI. I anticipated price to deliver within the macro period as there was lower time frame market maker model at play where price reached for the original consolidation low just after I moved my stop to break even. Price then creates a 5 minute bullish volume imbalance which held price for more than 10 minutes, which prompted me to start partialing out my trade. And although scraping the idea of price reaching down to Asia low within this move, consequently price ran up to make a new London high before finally reaching down towards my trial liquidity. However, I did not feel like I needed to participate as I've already met my daily objective. Motions before, I was confident with the setup as it gave everything I wanted to see as my London session bread and butter setup. So from there, you have Asia's high, and then you have sell side liquidity down here. You have original consolidation. Price comes down into here, comes down into here, trades into the buy side, taking the Asia high, identifying the displacement from that, trades up in there, 5 minute inverted fair value gap. Look at the candle bodies respect, trades down lower, creates displacement in here. That's that 2022 model. Pulls back up into here, entries here, stops above here, trades right down into here, and then you can see that he was utilizing this 5 minute volume imbalance with regards to price potentially reversing on him. Obviously, main target was in here, but we come up and we take the high one more time and then go lower, right? Going back to what I was saying, this is why we have to wait for certain areas of the market to become low resistance. And that has to do with the dollar and how it trades with indices. You're going to get these high resistance runs, and it's going to be a lot harder. But with that being said, I'll go into here. Right. So another thing, emotions after the entry, price retraced into the displacement SIBI as I anticipated. I was feeling confident yet cautious even when price did exactly everything I anticipated it would. I made a mental note that if price were to ever close a single tick inside the bearish 5 minute volume imbalance above the 5 minute SIBI, I would close the trade entirely regardless of how confident I felt. During the pyramid, as price was delivering from the 5 minute SIBI, I added 2 more contracts and trailed my stop to 1 tick above the 5 minute volume imbalance. I felt neutral as this was what I was going to expect price to do. After closing, I had mixed emotions as price chose to respect the bullish 5 minute volume imbalance, but I did not hesitate to close the entirety of the trade as I knew that we had delivered to a 1 minute market maker sell model original consolidation. Right, so this was the idea of the buy side, right? Buy side of the curve, sell side of the curve. You have your 1 minute original consolidation. First stage, second stage, smart money reversal, into your low risk sell, and then trading inside that second stage lower into here, right? Very good idea for exit, right? I think the exit, obviously you can tell, is a very good exit, right? That's why we go back to making sure that you try to trade to the most least resistance area in the market, not trying to aim for higher time frame runs or anything like that. And I think you had another trade in here. Yeah, so same thing. And then you've got time, right? You've got that 250 to 310 macro in here. And overall, I think it was pretty good, right? 1-to-1. That's all you need. Risk to reward is not too much. So I think it was a great trade. I think, main thing takeaway is you were confident in your approach and what you were looking for with regards to the setup and model. You had a really good exit, and you were smart enough to understand and be able to kind of read what was going on with regards to those volume imbalances in order to tell you whether or not it was worth holding. You want to add anything, Henry?
I think it's a great trade. I like that you reached for the low-hanging fruit just down to the discount of that range from the larger perspective that we were looking at before on the 5-minute. And timing's right on too for delivery. Time and then price.
And that's the business right there. Now, if you give me just a second, let me grab something really quick, because I will go over this week's. Let me just grab this really quick. Okay. Can you see my screen, Henry?
Mm-hmm.
Okay. 1 second. Let me. Okay, so for this week, the idea behind this task has two main components. Do not go lower than a 5-minute time frame, including executions. Okay, so we're not going any lower than a 5-minute. We're going to stay a little bit higher ended on our time frames. We don't need to go below a 5-minute time frame in any aspect. I encourage you to try to not even look inside the smaller time frames, but then vice versa. So London session must trade in the opposite direction that you intend to trade. So if you're looking for a long in the New York session, you must identify that London session traded lower. So same idea. 2 weeks ago, we had an area, or we had an assignment where we were looking for the previous day to go in the opposite direction in which we were looking for. Same idea here, but actually just going within the session. So if you're looking for price to go higher in New York, you need to verify and identify that London overall went lower. Vice versa. If you're looking for price to go higher or lower in New York, you want to identify and verify that London went higher, right? So that's this week's training exercise. Account balance should be rolled over from the previous week. 2 trades maximum, right? Risk 0.5% if you're in profit or just starting an account. If you win your first trade, stop. If you lose or go break even, you can risk another 0.25%. And if you're currently in drawdown on the account, risk 0.25%. And if you win your first trade, stop. If you go break even or lose your first trade, risk another 0.25%. Obviously, target a liquidity pool or inefficiency, at least 5 handles on ES, 10 pips on Forex, 20 handles on NQ. Always use a stop loss and journal everything below. So really the main idea, don't go lower than a 5-minute time frame, and identify what London session did based on what you are expecting out of New York session. Any questions, comments, or concerns before I get into the next thing? All good here? Okay, so this will be our last training exercise, at least for a while. We might go back into them a little bit later, but this will be our last actual physical training exercise. We have all those we have 29 training exercises for people to go back, and you guys can refer to them. You guys can use them. If you're new, you can use any single one. We will still review them as you continue to kind of use them. But what we're going to start doing is we're going to open up another kind of forum kind of like the training exercises, but there will be no really specific training exercise at all. What we're kind of inspiring you guys to do is throughout the weeks, um, any trade that you take. So as you trade, whether it's a demo account, a funded account, a live account, whatever the case is, your trades that you take, not anything to do with any form of exercise, just however you trade, we're going to have a specific model to kind of submit it, but we're going to be just reviewing your trades in total, not just an exercise. So as you trade throughout the weeks, as you're considering certain things, as you're trying to get funded, as you're testing certain models, whatever the case is, we're inspiring you guys to submit these trades, and we'll give you guys feedback from that. So we're going to kind of pivot away from, we'll still go over to the training exercises next week, and this won't start until the week following, but keep it in the back of your mind. After this week, we're going to go into a kind of area of format where you guys are just able to submit your trades. You don't have to necessarily follow an exercise or any sort of criteria. We just want to know what you were looking at, what you were trying to use. Are you trading a funded account? Are you trading an evaluation? Are you trading live? Are you trading demo? All that stuff. And we will just kind of give you handcrafted feedback from there. So it's a little bit more open. We've done 29 straight weeks basically of training exercises. And I think that we have a plethora of different exercises from any different area in the market that you can think of, both technically and psychologically, and those are always going to be there for you guys to use, repeat, practice. But now going forward, we want to just see how you guys are doing as traders. We want to see how you do when you don't. The only thing you're following is your plan and your model, and it's good for you guys to give us reference as to whether are you trading on a funded account, are you trading on an evaluation, are you trading demo, right? Give us all those things and let us know what it is. And so we can continue to give you guys this handcrafted feedback. And so, dependent on how, obviously, if there's enough where we can review them all in one session on these calls, great. If it gets to a point where there's a lot of them and we can't cover all of them on a call, we will literally just randomly pick, right? It'll be random, and we will just pick a certain number of them, and then we will, all the ones that we don't pick, we'll go back and we'll type in feedback as well. But for the most part, because we're just starting it, I'm not expecting too many submissions. But once we do kind of grow and more submissions start to come, there'll only be a certain number that we pick, and it would kind of be random. But let us know your feedback. Let us know if there's anything you guys want us to add to that type of idea. But that is kind of something that's in the works in the next week or two. I think that's about it for me.
Yeah, it's all in mind.
So,
I think there becomes a point in your own trading where you need to. The training exercises are great, right? Because it's helping you explore lots of different approaches to the market under different conditions and understanding your psyche and the technical side. But at some point, you have to work towards something that is consistent for you. And that's different for everyone, right? Everyone uses a different PD rate for entry, or has a different time of the day that they like to trade, or works from different time frames because maybe that suits your psychology better. And so when you find what's consistent for you, then it's time to double down and put the practice in on that instead of working between a lot of different things, because you can kind of get into a mindset of not necessarily strategy hopping, because it's all the same approach generally, but you want to have something that you're looking for specifically in the charts and that you can repeat with consistency. And we want to see y'all practicing that and trying to find some consistency in the submissions that you're making too. So just keep that in mind as we go forward, and I think it'll be good. That's it on my end.
All right. Well,
so if you don't have any other questions,
that's it on my end. I'm good.
Aiden, Stuart, Kate, awesome. Or CIC typing as well. Thank you. Okay. All right, good.
Thank you guys. Appreciate it.
Yeah, thanks for showing up this morning. Thanks for continuing to invest in yourself and be part of the community. We'll see you on Monday, tomorrow, for morning chart and chat, 8:45. Be safe, everyone.
Peace.